the big events for this week, we've got a CPI reading out of Australia. I'm expecting that to come in higher than expected. The market's calling 2.6. I think that's going to come in at 2.7 or higher. Then that should help to support the Aussie dollar, I think, into that. I think the market will be expecting, especially after a recent rate cut, that the CPI will be moderate. I think if there is a little bit of a higher than expected CPI, that should increase some upward trajectory for the Aussie. Then on Thursday, it's really quite a slow week for data and events, really. But on Thursday, we've got the US preliminary GDP. This is the preliminary cut before they go through and check it. We always laugh a little bit about that. Every kind of second or third month, the preliminary and the final will change, but they don't change too much more than 1.1 of a basis point. The market is expecting that to come in at 2.3. I've run some numbers on that, and I think it's going to be weaker than expected. I think 2.1 is going to be the number on the GDP for the preliminary on the US, and then the final might come in at 2.2. But 2.1 is what I'm expecting for Thursday. And then we also have the initial claims number, which is the number of people who are claiming unemployment benefits for the first time that month. The market is expecting 220,000 new claimants of unemployment benefits. That number has been consistently around the 218 to 224 number for about the last 6 months. I think it's actually going to come in higher than expected. I'm calling for it to come in at about 240. I think 240 would actually be supportive for the US dollar, because that would absolutely put the final nail in the coffin of any rate cuts more in the US. So I'm calling 240 on the initial claims, 2.1 on the US GDP, and 2.7 on the Aussie CPI. So it's out there in the world to be safe forever. So we'll see how good I am next week.
Isn't a higher unemployment number like a sign for the Fed to cut, because it shows weakness in the labour market?
Well,
you could see it like that as well.
Yeah, and there's both sides, right? I think the US is, if it's not more concerned about inflation than anything else, it really should be. That was the reason that we saw the dollar move on Friday, right? Was that the Michigan sentiment number came in kind of where it came in, but the inflationary expectations for 5 years were at a 30-year high. So, if purchasing managers are expecting that inflation is going to be, or is running at a 30-year high, that's a big filter into, it should be a big filter into interest rate decisions over in the States.